we're kind of getting into that like free fall type of feeling where the markets fall, they go up a little bit, and then they continue to fall.
70% of all gold production in the U.S. comes from a single state, Nevada. Conventional wisdom says that all the good deposits have been found. But one geologist who's discovered more than 30 million ounces of gold says he knows where to find Nevada's missing gold. And right now, he may be on the verge of being proven right.
Investors and speculators can learn more at crushthestreet.com/gold.
I knew this was coming. There were warnings.
Hello everyone, and welcome into crushthestreet.com. I am Kenneth Ameduri, and it is Martin Luther King Day, January 18th, 2016, and markets are melting down. Now, the U.S. stock market is closed for today, but the markets have been devastated, and we're kind of seeing it going into that panic mode. You know, there's one thing when it goes down to 300 points, let's say the Dow Jones goes down 300 points, but then kind of goes back up. We're kind of getting into that like free fall type of feeling where the markets fall, they go up a little bit, and then they continue to fall. We saw that happen with gold going from 1900 to where it is now. We kind of saw that, or we definitely saw that with oil, where it's just kind of like it's more likely to continue to go down than it is to spike back in the immediate future. Well, we're seeing that with the stock markets at the moment, and the Dow Jones is down. So 1 year ago, it was down. From 1 year ago, and the Dow Jones is down nearly 9%. But from just 1 month ago, it's down almost 7%, 6.66% to be exact. From 1 year ago, it was down about 7%, and from 1 month ago, we've just really seen in the last month, we've really seen that free fall happen. It's down 6%. From a year ago, we got the Nasdaq down 3%. But throughout the year, and for all the markets, this is what kind of happened. It went back up towards throughout the year. Then we saw its volatility from September to December, and then in the last month, we saw the Nasdaq fall almost 9%. Let's jump down to Europe. Similar situation in Europe. 1 year ago, the Euro Stoxx 50 is down 8% year to date, but over the last month, it's down almost 10%. Same thing with some other stock markets here in Europe. The DAX is down 6% from a year ago, but down 10% in just 1 month. Go down to Asia. Over the last year, the Nikkei is about flat, but in the last month, it's fallen about 10%. The Hang Seng Index over the last year has fallen 20%. In the last month, it's fallen 11.5%. The CSI 300 Index is down 13%, almost 14% over the last year, but down 17% in the last month. So January, going into 2016, we've seen the impact of the global economy really start to melt down, the slowdown of global growth, the impacts of raising interest rates. And we talked about that the interest rate hike is going to set some negative confidence, suck the confidence out of the economy, and sell-offs will begin. And we're seeing that sell-off. And when people get into that panic mode and they're more insecure about holding their stocks, one person sells, and that makes another person panic. And then when that person panics, the next person panics. And then when a lot of people panic, we see things really start to get ugly quickly, and that mindset of confidence in what you had maybe even a month or two ago vanishes. And I'm really interested to see what is going to happen in 2016. I think that markets going down is going to continue to be the story. We'll see how it goes. Let's take a closer look at the U.S. economy by starting off with Walmart. The discount retailer the retailer that people go to when they have no money, is closing 269 stores worldwide, and 154 of those stores are right here in the U.S. That's 3% of their U.S. stores closing, and this will affect 10,000 workers right here in the U.S., all set to start at the end of this month. This is the real economy, where even stores that are geared to sell to people that have little to no money are hurting. Walmart. This is a very, very important thing that you got to realize. We got the freight index, the what's that called? The Baltic Dry Index hitting low after low after low. The unemployment rate at 5%, with the labor force participation rate hitting 40-year lows. We got United Health talking about jumping ship and getting out of Obamacare because it's not profitable. We got deductibles for insurance going through the roof, and the actual premiums going up when Obama said that they wouldn't. This is the real economy. And I gotta give President Obama some credit going up at the State of the Union address and just expelling and just presenting such confidence, such arrogance of how strong the economy is and how good everything is and how good of a job that he has done with his administration. And in the face of all these facts that the global markets are melting down, I mean, I just showed you how all the stock markets are reacting, and it's impressive to watch him get up in front of the world and talk about how great the unemployment rate is and how amazing it is that we are insuring many more people now with the Obamacare system, and just ignoring the facts, ignoring the high or the low labor force participation rate and the fact that deductibles are going through the roof. I mean, essentially people have catastrophic insurance. That's what Obamacare is, and that's what it has become, catastrophic insurance, regardless if you're healthy, regardless if you've taken care of yourself, you have catastrophic insurance because you got to pay for everyone else who is unhealthy. You got to pay for people who are older. You got to pay for it's not a free market system, it's a socialist system, and the American people are getting crushed. And Walmart is getting crushed, and this is a company that gets subsidized and benefits from the government welfare system. I mean, just think about it. I mean, Walmart can afford to pay its workers minimum wage because the workers are going to be able to get on government programs to subsidize their lifestyle. So they don't have to pay them a higher wage. They get to pay them $8 an hour or whatever the minimum wage is for that state. And the government is going to give them food stamps, EBT, welfare checks, and free education through the school system. And there is this subsidy that Walmart still receives, and yet they still are hurting. The discount retail, that's an important note that I wanted to make today. Things are not as good as they seem, and it's happening the way in a lot of ways the way we have been anticipating. I don't act like I am going to perfectly figure out how the markets are going to react, because markets act irrationally and they do things that we don't expect. But the macro situation of what is going on is inevitable. The fact that things cannot go on like this forever is inevitable, but exactly the way things will play out, well, that's a little unknown. But we're seeing it collapse before our very eyes right here, right now. We saw over the weekend the first implementation day of the Iran nuclear deal going into effect. The International Atomic Energy Agency released a statement saying Iran has fulfilled all of its measures required under its deal with the six world powers, and sanctions are now being lifted. And we saw a prisoner swap over in that region, and people are actually a bit concerned with this. It's not, obviously we want the Americans back and out of captivity. That's not the question. It's some people are having an issue with the country negotiating with quote-unquote terrorists, but it becomes a little more messy when you consider the fact that NATO and the U.S. have been funding groups like ISIS and Al-Qaeda, and the picture isn't as clear when you take that in consideration, because, of course, those are terrorist groups as well, and for us to, pick on one negotiation but then turn a blind eye to the other, well, that's just messy and irresponsible if you ask me. So, to say the least, I believe that the follow-through with Iran sanctions being removed proves that Russia's geopolitical chess game is actually having some victories. And it's another sign that the East is winning the information war, and Kerry is actually backing down publicly by stating that getting rid of Assad is no longer a U.S. goal in the Middle East. They have moved, their motives are shifting, and things are changing. Now, oil is now below $30 a barrel, and as sanctions in Iran are being lifted, we are set up now for more oil to enter the market, and this is roughly OPEC. Producers lowered their basket price to $25 a barrel, dropping the official price under $30. And this was actually before Iran's 500,000 barrels per day is going to be hitting the market. And this is actually low because Iran is aiming to increase output by close to 1.5 million barrels a day by the end of 2016, which will take production to 4.2 million barrels. And this is according to Iran's oil minister, Bijan Zaganeh. The Bitcoin price has been volatile due to the block size increase debate and GBTC stock crashing, which has coincided and possibly led to the Bitcoin price being down. We're looking at Bitcoin at $386 a coin, just a penny under $387 actually. Key developer Mike Hearn, who supported the block size increase, released a damning article. There is now a more complicated arena with Bitcoin Classic and Bitcoin Unlimited groups of software vying for public support. XTnodes.com shows that there are only 11.6% of nodes that want a block size increase. And our take on Bitcoin is that it has survived software issues in the past, and this one was coming for a long time, and it should resolve itself over time sometime this year. And as we've said before, we need to expect volatility and then a price rise after the resolution. Remember, by July, the block reward for miners is halved, which should shoot up the price of Bitcoin around that time, though probably less than the previous block reward halving in percentage terms. We're going to be doing some interviews. I'm going to be doing some interviews this week, and we're going to be drilling our guests on what's going on in oil, what's going on in China, what's going on in precious metals, what's going on with the dollar in 2016. And if you've missed some of the past interviews, you can either go to the YouTube, just search Crush the Street, or find my interviews at crushthestreet.com. We've had some really interesting guests on. Dale Olmsted talked about the precious metals debit card. He's got a company that does that. It's one thing that it's good about it is that you can transact with your metals. You can use them as a debit card, and if you believe in precious metals, you want to actually hold a position in them. As they go up, you're exposed, and you can use them, in 50-cent increments, $1 increments, $10 increments. I mean, that's what's kind of really fascinating about it. Of course, it's somewhat tied into the banking industry, so I would tell you this: if you don't hold it, you don't own it. So not everything needs to be in that debit card, so you want to be cautious with that. But interesting idea. I hope it's something at least entertaining for you to listen to, and just kind of see where things could be heading with precious metals. Trey Knippa was a very intelligent futures trader, and he's got some theories on how to profit off the demise of China, the immense amount of QE that is going to hit the Chinese yuan, and how that will play out. I mean, the macroeconomics of China, the macroeconomics of Japan, and that against gold and that against the dollar. A lot of interesting things that we discussed. This was a prior interview, and we got John Rubino and Dave of X22. I mean, all favorites here at Crush the Street, so you definitely don't want to miss those. And if you've missed them, feel free to check them out at Crush the Street on YouTube or crushthestreet.com. So everyone, thanks so much for taking the time to join me today. Feel free to go at crushthestreet.com.